There are always opportunities inside every market. We're starting to see the sign of crypto turning around. We know that the Tier 1 and Tier 2 charts are incredibly important to look at and to understand. They give us future market direction. Right now, the US 2-year, the US 10-year, the US 20-year, and the US 30-year have been placing enormous pressure and stress on the major indices, stocks, crypto, and commodities. Later this week, Jerome Powell will talk at Jackson Hole, but we're seeing there's a very low probability of an increase in the federal funds rate at the next FOMC meeting. What this is telling us is potentially we're going to see a rally incoming. As smart money and professionals, we don't get conned by what institutions do. Institutions terrify retail traders and investors. They get them to buy on green and to sell on red. You're paid inside financial markets for your knowledge plus your courage, which allows you to synchronize in and analyze the charts from a structural perspective. We're going to do a deep dive through the market and see what could happen next week. Stay tuned, this is going to be one that you don't want to miss. In the past 24 hours, total crypto market cap has increased 0.77%. We can see XRP is the greatest gainer in the top 7. In the past 24 hours, top 100 greatest percent gainers: Rune, Sui, Stellar, AKT, XRP, Arweave, Ton, Ape, and OKB. The greatest losers, top 100 past 24 hours: Bitcoin SV, Woo Network, SHIB, Matic, Bitcoin Cash, Uni, Leo, Optimism, and Gate Token. The crypto market is an incredible market. It's so incredibly volatile, but that's actually what makes you the returns. Looking at the past 24 hours, we can see Serum up, True Finance up, SNT up. What about Merit Circle MC? Santos is up. Cream is up, Rune is up, and Rune has been doing very well for a considerable period of time. There are always opportunities inside the crypto market. Sometimes there may not appear to be any, but if you look a little bit more deeply, you'll find a ton of them. Looking at total crypto market cap, we're actually very close to a structural support level, down around this $978 billion mark. We've seen this particular structural support level get hit multiple times and hold. It's likely, for a lot of different reasons, that we won't go far below this particular structural support, but if we do, it just means that the bargains will increase, not decrease. You could think about it this way: if we time travel back to June, a lot of people would be exiting the crypto market as it came down like this. It looks very, very similar to what we're looking at right now. What happened next? It absolutely spiked up. You've got to be very, very careful about getting shaken out of the market. It's very normal, very natural, and unfortunately, if you apply common sense, your fear will take over, and that's exactly what the institutions want for you. This community was started to give you the smart money mindset, to understand what the institutions do to you. The institutions want you to run. Why do they want you to run? The institutions want to buy very, very cheaply. You have to think about it like this: when price is coming down, the institutions are saying to retail traders and investors, get out of the market. We want to buy. Go away and sell us everything you have as cheaply as possible. This is what I call the institutional trap. This trap is so famous that there are even memes that float around the internet. It basically goes like this: I sold, then the price absolutely rallied. That is not by mistake. You have been set up. When looking at Bitcoin 24 hours ago, the market looked like this. Right now, the market looks like this. You can see it's pretty much unchanged. Just a little bit more green. After being inside financial markets for nearly 4 decades, one thing I've come to realize: these particular spikes can only be caused by institutional players. It takes an absolute massive amount of money to push any market in any specific direction. These spikes are what I call retail get-out spikes. Why do retail get-out spikes exist? They simply exist because the institutions want to buy cheaply. Why do they want to buy cheaply? Because they want to sell back to retail at a more expensive rate. Please let me know in the comments what could be a couple of potential reasons why the institutions want to buy Bitcoin and crypto more cheaply. We'll talk about those answers more tomorrow. We've looked at this in past episodes. The concept is, even if you see price come down, it's going to go up. Price is always moving in a wave. A lot of people don't realize that if price moves down, it doesn't have to move back up as much to even break even. What you will also see, especially inside crypto, when you have deep 20% plus declines, the resulting uptick can be very, very impressive, if not immediately. What we saw back here with so much mischief going on inside the crypto market, we saw big returns a little bit later on. Please don't get freaked out just because price goes down. What typically occurs is when people see negative price momentum like this, they just immediately think it's going to go below past lows. This was quite climactic in terms of the sell down here, but what happened? Everybody went short and sold out their long positions. As a result, the institutions came in and said, yeah, I'll take those shorts, and they liquidated them. 3 days ago, there were more than 1 billion long liquidations. That what caused this spike down. But you've seen, just from the heat map, there's many double-digit gainers going on right now. But retail is trapped by the institutions. The institutions say, you can't lose any money. Oh, so therefore, they drive price down and they know that you will sell. And then what do the institutions do? They push price up, creating fear of missing out, and people just pile into the trade only for the trade to go against them. They then sell out. They see it going up again, they buy. Then the institutions push it down. I think you get the idea. You can't suffer the retail trap if you want to be profitable. Now, how do you get out of the retail trap? Because there's a very big survival instinct that says, wow, when this capitulation occurs, when these sell-offs are occurring, just run, get out of the market. For example, did you actually sell when this capitulation event occurred? Institutions are always forcing people to sell at the wrong times, and they come back into the market and they feel that things are going to repair and the institutions sell it down again. They repeat this dance for as long as they possibly can, until there's basically no one left. At that stage, there's not reason to push it down too much, and we form bottoms. The institutions figure out that if it goes any lower, people will lose confidence. So what do then? They create a bottom pattern and the price will naturally go up. But always remember, even in bull runs, you can get very, very substantial drawdowns. That might not look like much, but it was a doozy. You can see, even in a bull run, negative price momentum is always present, because price is always moving in a wave. And when you understand this fact, it changes the way that you look at financial markets. These are one-day candles in Bitcoin, and you can see that the price can be very negatively biased and it can be incredibly volatile. This is in a bull run. It's at times like this that you need to understand how financial markets actually work. Gambling and guessing will not work. They will just blow up your accounts. You need to know how the financial markets actually operate. With the CTKS method, we mark up the charts so that we can see where the structure is. If we zoom out on the daily basis and look at Bitcoin, we have a structural support level which is very, very strong between 20,780 and 22,746, and there's even structure above that. We also have quite strong support between 24,191 and 24,768. Bitcoin is currently 26,144. When looking at the US dollar currency index, which has been an absolute global wrecking ball on the stock market and crypto and also commodities, we can see that this resistance level through here has held very, very well. That's around the 103.50. From a structural perspective, we've got enormous resistance incurred inside the DXY structure from around 103.79 upwards to around 104. It's likely that the DXY may try to get above here because the US 2-year, the US 10-year, the US 20-year, and the US 30-year have been rallying. But it's likely that they're going to get up to a level of resistance. That means that there may be a little bit more negative price momentum inside the stock market and crypto, but I believe it won't be much. Please let me know in the comments, which way do you think the DXY is going to go in the next trading session? Do you think it's coming down to this 103.12, or do you think it's heading up into this mass of smart money sell areas? Looking at CTKS structure inside the US 10-year yield, and this has been marked up since 1912, there's a mass of smart money resistance around this 4.286 area, as well as the 4.318 area. What we saw, the US 10-year yield just couldn't get through it. It wasn't supported very well and moved down to the next smart money structural level. It's been basing here and finding a degree of support. Do you think it's going to move up? If it does, price moves SL to SL or SZ to SC. If the US 10-year yield comes up, we expect pressure on commodities, Bitcoin, stocks, and indices. If it comes down and breaks down, we expect the exact opposite. Jackson Hole is occurring later this week, where Chairman of the Fed, Jerome Powell, will be giving his talk. We can see at the moment that the probability of a 25 basis point increase in the federal funds rate is really low. It hasn't been spiking. It's come up a little bit from 10% 1 week ago, and 1 month ago it was 17.9% probability, down to 11%. These percentages have been very, very accurate across time. Now, what does this actually mean? If Jerome Powell was threatening to increase interest rates, we would expect that probability of a 25 basis point increase to be much, much higher than 11%. What the market is saying, Jerome is going to stay with rates as they are. This will have the impact of bringing all those yields down and pushing commodities, stocks, and cryptos up. We'll be watching this very closely. Don't forget to subscribe and please like the video if you find it helpful. One very good thing, when we look at the structural levels and we put SZs around the SLs, one thing that we can see, the Nasdaq has really, really fantastic structure. Smart money buy areas from 13,189 up to 13,273. The Nasdaq closed out at 13,290. This is a very, very good thing. If we didn't have this smart money structure below, it could be much easier, especially if we had a fresh air gap, which we do not, for the Nasdaq to fall down price-wise. At the moment, it's being structurally supported, and we could see a fall in the DXY, a fall in the yields, and the indices rallying. That will, of course, bring up commodities and crypto as well. Another potential piece of good news, when we look at net Fed liquidity, it started to just turn around in terms of its trend change. Before, it was just coming down and down. We've seen a minor injection in. That's a good sign. When we look at Bitcoin, what we need to understand, where is smart money buying and selling? So let's pop on the indicator. and these indicators are updated. If we find that price is moving outside reasonable levels, I will make sure that the indicator is updated. We can see a smart money resistance level, the next one, at 26,295. Bitcoin is currently 26,175. A smart money support level below is around that 25,763 level. We're starting to see a bit of strength returning to the crypto market. Look at XRP. XRP is really going for it. This, as Bitcoin just starts to bottom out, it could be very, very interesting what's coming in the next week. Looking to Solana, we can see Solana is coming up to a smart money sell area between 22,1372 and 22,2573. What is pushing Solana up right now? That is a very good question. The answer, of course, is Bitcoin. Let's just quickly overlay Bitcoin's price action on Solana. What we see immediately is Bitcoin is starting to break out. It's no surprise whatsoever that Solana is doing the same thing. XRP is as well. The alts will follow. When people enter financial markets, they think that there's one area of support and one of resistance. In fact, there are many areas of support and many areas of resistance. The strongest ones are structural support and resistance. How do we see these? Let's have a look at Litecoin and we'll throw on the CTKS indicator. We can see that Litecoin had a structural area of resistance at 64.72. It passed through this because of Bitcoin's strength, and we can see another level up here at 65.45 that Litecoin will interact with. That's quite heavy. You can also see that throughout this area, 63.63 has held Litecoin's value very, very well. These particular lines are drawn up since 2013. This is not recent indicative price, so we don't need to do story-based analysis or SBA on this particular chart. These particular dashed lines are called SLs or Stanfield levels. The thicker it is, the stronger it is. We've just passed through a very thick area. This is fantastic. If we come down, we may retest before resuming. But if that happens, we would expect Bitcoin to lead the way. This is what happens with Bitcoin. If Bitcoin just flourishes up, because we know where the structural resistance levels are on Bitcoin, and this is how you get one chart to tell you the direction of another. Please let me know in the comments, where do you think Litecoin is headed to in the next 24 hours? When we look at Doge, we don't see the same kind of behavior that we see in XRP and ADA. Why is this? It's because of a structural level stopping Doge. Let's throw on the indicator and see what's going on. And yes, there it is. We can see that Doge is starting to get above it. This is very, very good news. That structural resistance level is at 646. And we're seeing Doge just eke above it at 647. The next one up is at 655. We also have lighter support levels, 636 and also 626. One thing, price is always moving between SL to SL, either up or down. And with this knowledge, you can understand where price is actually going because you observe price action. That's the way the professionals do it. They don't get caught into any specific narrative. If you're trading in Doge, the 665 level and the 668 level are levels that you want to keep your eye on. They could create a bit of a problem for Doge because they're relatively strong. When we look at total crypto market cap, we can see the resistance level is a long, long way away. This means that the alts could absolutely run if Bitcoin strength continues to gain momentum. And we saw these safety nets. This is so important to know where price can fall down to. If you don't have the service or you're not marking up your charts with your knowledge of the CTKS method, it's impossible to know where structural support and structural resistance actually are. This means that all eyes are currently on this specific level, 26,295. We need Bitcoin to get above that, convert it to support, and to go for it. That will confirm momentum inside the alts. For next week, if we see the DXY start to lose strength, the yields start to lose strength, there could be an almighty rally inside crypto and the stock market that will catch 90% of the public off guard. It sounds like a perfect time to trap retail. XRP is looking really good. It cut through this very strong smart money sell area around that 54.42 area, and it started to convert it to support. This is wonderful because that's a really strong level. The next area of resistance is all the way up at 56.45 and just a little bit higher at 56.78. XRP is showing a lot of strength and a lot of momentum right at the present time, and this fresh air gap gives XRP the capability of moving up very quickly. If you don't know where the smart money are buying and selling, if you don't know what the chart structure is and how the charts interreact and interrelate to other charts, you're going to always be guessing. If you're guessing, you're at the mercy of the institutions. It's important to understand there are always opportunities inside the crypto market. The critical thing is having the knowledge to understand how and where to look. It's not at all uncommon to pick a crypto that can do better than bank interest, annual bank interest, in an hour. If you'd like to get the knowledge of how to react to these particular markets, Perperatum has kindly offered a CTKS partial masterclass scholarship. You'll find the masterclass to be elite. It is a Rolls-Royce version of what you need to know to gain inside the crypto market, as well as understanding the stock market, the bond market, and commodities. As professionals, we understand the price can go up, it can go down, or it can go nowhere, and we use our daily three-dimensional risk management to understand that we control the trade or investment, but the market controls the return. The key is to get enough courage and enough knowledge to apply what you've learnt into the market. If you find yourself being scared away from the market, just decrease your position size down to something that you can afford to just play with. I would recommend you saying, institutions, you're not going to beat me. And when things get super green, say, institutions, you're not going to con me either. It's true that life's internal battle is the real battle that we all face. The key is to create the courage that you need to get into financial markets, place your trades, place your investments. Do not go all in and more at one level. That's just crazy. Instead, start small and scale. Make it so small that you don't even care. Why is that? Because it's real money. People don't like losing $1. It will make it very, very real for you. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.